Yo, what's good, Colin?
What is going on, Will? It's earnings call season,
It
and you and
is.
I are going to be up late, up early in the morning, reading the tea leaves for all the financial reporting from some of these Bitcoin miners.
On behalf of the Mining Pod and Blockspace Media, we are proud to bring you yet another edition of the live stream. I don't know what we're going to call it. I think maybe the exhaustion live
Earnings
stream.
call live stream. I mean, we've got pretty vanilla names, right? Mining Pod, Bitcoin Stock Show.
Yeah.
But
You know what
we,
you're getting.
you know what you're getting. We've got IREN today, formerly Iris Energy. They have the insanely frustrating practice of doing Australian fiscal year reporting. So we are getting Q4 for them, but it is actually the second quarter of their fiscal year.
Yeah, that confused me so much. I was like, is there a typo? And then I was like, wait, no, they're upside down
Yeah.
there. So
On the one hand, it's nice because they'll report earlier than the other companies who do normal reporting where they'll do their full use in the end of February and the beginning of March. Same with CleanSpark. We did them last week. They do fiscal year reporting where their year starts in the fourth quarter. So they did their first quarter for the fiscal year 2025 last week. But anyway, they just actually released their financials. So a few numbers. I'll be digging into stuff as they're doing their call to give some more clarity on certain things. But they booked 113 mil in revenue for the first 3 months, or for Q4. That is up substantially from their Q3 revenue, which was in the ballpark of about 50 million. So what we're seeing there is obviously IREN really ramped up their hash rate at the end of the year, deployed a bunch of next generation ANT miners like the S21 series. AI revenue not really moving that much though, but they billed 2.66 mil in AI revenue for Q4 versus looks like 3.2 for Q3. So just immediate take there for their revenue. Like I said, I'll be breaking out EBITDA and all of the other metrics like SG&A that we like to keep an eye on. Are they starting the presentation? Nope.
nope.
They are not.
Turn their music on just slightly here so we don't miss it. It's 5 o'clock though. 9 a.m. in Sydney, Australia.
So I think the big things to look out for in this earning call, and they released some information on this. And they're we going? All right,
we're going.
Let's dive in.
All participants are in listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during this session, you'll need to press star 11 on your telephone. If your question has been answered and you'd like to remove yourself from the queue, simply press star 11 again. As a reminder, today's program is being recorded. And now I'd like to introduce your host for today's program, Lincoln Tan, Director of Investor Relations. Please go ahead, sir.
Good afternoon to those joining us from North America, and good morning to our listeners in Australia. Welcome to IREN's second quarter FY25 results presentation. My name is Lincoln Tan, Director of Investor Relations, and I'm pleased to be joined today by Daniel Roberts, co-founder and co-CEO, Belinda Nucifora, CFO, and Kent Draper, Chief Commercial Officer. Before we begin, please note that this call is being webcast live, accompanied by a presentation. I'd also like to remind you that some statements made during this call may constitute forward-looking statements. These are based on certain assumptions and subject to risks that could cause actual results to differ materially from our expectations. Listeners should not place undue reliance on these statements. Please refer to the disclaimer on slide 2 of the accompanying presentation for further details. With that, let's get started. Over to you, Dan.
Thanks, Lincoln. Good afternoon, everyone, and thank you for dialing in to our Q2 FY25 results presentation. So, straight into the highlights. A record result in Q2, underpinned by some pretty rapid growth over the last 6 months, 12 months, and low-cost Bitcoin production. So the investments we've made in scale and efficiency over the past 12 months, as you can see, are starting to flow through to our earnings. $18.9 million of NPAT recorded last quarter. We expect this continued earnings momentum in tandem with that growth profile, noting that the 31 exahash of energized capacity was only achieved at the end of the second quarter. And you can see that the average operating hash rate for the prior quarter was substantially lower than that. So as we continue into ramping up to 50 exahash by the middle of this year, we expect to see those numbers to continue to grow in parallel. Final point on this is to note that, yes, every miner's strategy and financials are slightly different, but these financials are not impacted by any Bitcoin revaluations. We don't hold Bitcoin on our balance sheet. There's no fluctuations in the value of those up or down, sideways, and consequently, our results reflect the pure profitability of our underlying operations. On the growth front, 3 key initiatives which we'd like to highlight today. So firstly, we're excited to announce Horizon 1. Horizon 1 is our new 75 megawatt liquid cooled AI data center to be delivered at Childress this year. 75 megawatts of capacity translates to around about 50 megawatts of IT load. And what we've seen, particularly coming into the start of this year, it's increasingly clear that there is a strong market opportunity for us to capitalize on the shortage of liquid cooled data center capacity. So as many as you would know, the liquid cooled Blackwell GPUs from NVIDIA are in the process of coming to market, and the required rack densities are continuing to escalate with this generation and subsequent generations of GPUs. So we are future-proofing this deployment. We're designing and building for densities of up to 200 kilowatts per rack, well beyond the 120, 130 kilowatt rack density required just for the Blackwell GPUs. So we're excited. There appears to be a real scarcity of liquid-cooled data center capacity, and we feel that we're in a relatively unique market position to deliver this type of capacity in a relatively short time frame. Secondly, we're excited to announce the development of Sweetwater 2, a new 600 megawatt site that will further strengthen our position in West Texas. Situated around 28 miles from the 1.4 gigawatt Sweetwater 1 project and about 39 miles from Abilene. This expansion would create a 2 gigawatt data center hub at Sweetwater, with design work already underway for a direct fiber loop between the two sites. We've secured over 500 acres of land and are in the process of finalising a 600 megawatt grid connection agreement with a target energisation date of around 2028. Now, one important caveat. We always talk about ones and zeros with grid connection agreements. We do not have one yet. So at the moment, this is a hypothetical project. However, we've chosen to disclose the details today for 2 key reasons. One, this project is in late stage development, and we're getting closer to the execution of binding agreements. But secondly, the 2 gigawatt data center hub it potentially creates with Sweetwater 1 is material to the market opportunity we are seeing in West Texas. So while this is still a project under development, Sweetwater 2 would provide yet another organic growth pathway for our AI and mining business. However, more importantly, expands upon the potential value of the single site AI opportunity at Sweetwater, something that we'll come to a little bit further on in the presentation. Finally, let's not forget about the rapid expansion of our Bitcoin mining business. Our operations from 31 exahash today to 52 exahash this year. We're dedicating 75 megawatts of Childress Phase 6 to Horizon 1. And as a result, this adjusts our prior expansion plans from Bitcoin mining from 57 down to 52 exahash. But to reiterate, we remain on track to hit that 50 exahash target by mid this year. The 500 plus site team at Childress continues to be well positioned to deliver 50 megawatts every month of data centers. In terms of the corporate and funding update, we're pleased to confirm that US domestic issuer status and US GAAP reporting will commence from half 2 2025. Our balance sheet remains robust. We closed our oversubscribed convertible note at the end of 2024 and recently put in place a $1 billion ATM facility to provide flexibility to fund growth initiatives. However, market conditions, as we've all seen, are very dynamic, and we are always looking for ways to optimize our capital structure, and we remain continuing to evaluate alternative funding options. Finally, in terms of investor distributions, as you can see from this result, there is significant operating free cash flow being generated. However, from a capital management perspective, we've made a decision to accelerate our investment into the strategic initiatives that I've outlined, and as a result, are deferring the consideration of potential investor distributions. So, into a little bit more detail about Horizon 1. As mentioned, we are planning to deliver a 75 megawatt liquid-cooled AI data center within Childress Phase 6, targeting completion the second half of this year. That will support a 50 megawatt IT load and include the installation of backup generators and UPS systems for power redundancy. Building this as part of Childress Phase 6, you can see on the map in the blue overlay. It is designed to support 200 kilowatt rack density, well beyond what's required for the NVIDIA Blackwell GPUs, and consequently with an eye to be able to accommodate future increases in rack density architecture. We've been working with a leading global EPC firm to deliver this project and leveraging our existing data center footprint with an estimated build cost of $6 to $7 million per IT megawatt. So why are we doing this? Well, liquid cooling is a key priority for large-scale customers. And what we've observed is a very limited availability of liquid-cooled data center capacity able to come online in 2025. Meanwhile, the liquid-cooled NVIDIA Blackwell GPUs are expected to ship in more meaningful quantities in the second half of this year. IREN is uniquely positioned to address this growing market demand, leveraging our immediate access to power and our existing infrastructure on site. 50 megawatts of IT load is a size that appeals to both smaller as well as larger customers, and also caters to NVIDIA's reference architecture, allowing a single cluster of up to 16,000 Blackwell GPUs. We have a unique opportunity to move fast in a market which is changing quickly. Horizon 1 will enhance delivery certainty for customers, i.e. it helps them cut through the chicken and egg dilemma by showing them more concrete plans around design and delivery. Initially, we're focused on Childress and building out a multi-tenant site there. We're engaged in meaningful two-way dialogue with a variety of prospective customers, noting that again, Childress will be prioritised for multi-tenant co-location in respective AI data centres, preserving the Sweetwater Data Centre Hub and Sweetwater 1 site for more single-site opportunities, which I'll come to later in the presentation. So uniquely, we have this opportunity to continue to scale this approach across our entire portfolio, something which we are actively looking at. Noting, of course, that the critical piece, access to the grid connection, the power and the land, is already secured. With grid connections already secured, we're seeing it's 4 to 7 years to bring these projects from origination into the real world. The data center buildings are already in place. All we need to do is to continue to install liquid cooling and power redundancy to scale up this side of the business into the market demand. So the 2 gigawatt Sweetwater Data Center Hub. We're very excited to announce our new 600 megawatt Sweetwater 2 development. We're in the process of finalising a grid connection agreement. As mentioned earlier, it's situated on over 500 acres of land, 28 miles from Sweetwater and approximately 39 miles from Abilene. Design work has already commenced on a direct fibre loop between the 2 data centre campuses to support network connectivity and create this 2 gigawatt data centre hub. We expect it to energise around 2028. And again, I'll caveat this, it's not signed yet, so there's absolutely still risk around this development. But the development process has been in the works for some time. We feel it's getting closer to a potential outcome. Importantly, in the context of our strategy, how we're thinking about Sweetwater 1 and the single site, this 2 gigawatt data centre hub, it potentially creates with Sweetwater 1 is material to the market opportunity we are seeing in West Texas. In terms of the existing 1.4 gigawatt Sweetwater 1 project, it's full steam ahead towards energisation in 14 months. Procurement is well underway to support energisation of the full 1.4 gigawatt bulk substation and additional primary substations, all by April next year. As mentioned earlier, we're working with a leading EPC contractor with experience on hyperscale deployments. General site and civil works to support construction are commencing shortly. Clearly, with the recent market announcements, there's an increasing level of focus and interest on West Texas as a data centre market. Accordingly, this is a very exciting opportunity for IREN to build one of the largest data centre sites and maybe hubs in the world. I'll touch a little bit more on how we're thinking about this site strategically later on in the presentation. Large scale, low cost Bitcoin mining. So 2 key pieces I'd like to reiterate today. One is the scale of our operations, 31 exahash installed. It was on time as we said it would be. We're on track for 50 exahash in 5 months and then 52 exahash shortly thereafter. This delivers economies of scale today and will continue as we continue to expand. We've got a demonstrated track record around operations, our uptime, and ability to deliver projects on time. The second point I'd like to make is we are a low-cost producer. It supports strong unit economics and ultimately earnings for shareholders. Since announcing our plans in May last year to expand, all of the investments we have been making are starting to flow through to operating efficiency and earnings. We have best-in-class efficiency at 15 joules per terahash. Our spot pricing strategy has delivered actual power prices of 3 cents a kilowatt hour, where the majority of our operations are today at Childress. Finally, you've seen this to start to show in our quarterly earnings, but also in our monthly updates. Our hardware profit margin is over 75% now as we've scaled over that 31 exahash mark. So the expansion to 52 exahash, as we've discussed, allocating 75 megawatts of Childress Phase 6 to support Horizon 1, adjusts our prior mining expansion plan from 57 to 52 exahash. To reiterate again, our 50 exahash target remains on track to be delivered in whole in the next 5 months. Continuing to build 50 megawatts per month of data centers at Childress. The efficiencies that we have with large single site expansions, 500 people on the site, effectively copy pasting every single building. As you can see on the right-hand side, the schematic diagram, that reflects our data center construction status. To the extent you're interested, you can continue to track our progress in our monthly updates. Our mining economics remain strong. We've seen the material step up in earnings and cash flow generations as we scale up. And on the left-hand side of the page, you can see some illustrative economics that reflect where we are today and where we expect to go. So the escalating power shortage, and escalating seems to be the only word that we can use given what we're seeing in the market. Clearly, it's been a very interesting couple of weeks with Stargate and DeepSeek. However, if we look through some of this volatility, nothing has changed for us. If anything, we've seen an uptick in observed interest in cloud and co-location services. AI doesn't live in a vacuum. Humans crave more and more, particularly if it gets cheaper over time. And I think the Wikipedia page for Jevons paradox has never seen so many hits over the last 2 weeks. So on this slide, we illustrate two market dynamics that are relatively well documented. The first is hyperscale CapEx, continuously being revised upwards. The second is the power scarcity dynamic, looking at a 36 gigawatt shortage in data center capacity across the US. With over 2 gigawatts of secured grid-connected power and land, this creates a compelling opportunity for IREN. This 2 gigawatts, 2.3 to be precise, is not hypothetical potential megawatts. This is power that is either flowing today or is secured by binding interconnection agreements with utilities being delivered by April next year. This slide essentially summarizes the macro backdrop of the opportunity for us here at IREN. Picks and shovels for the digital age. So just to change tack for a moment and share a bit about our history, why we are in this position, and ultimately set the scene for my final slide, where I'll discuss our strategic focus. Will and I have been setting this platform and gearing up for this market backdrop since day one. There's been no pivot. This has been a deliberate strategy. It can be traced back to our earliest investor presentation, as you can see on the right-hand side, in 2020, a vision which has remained unchanged. The value then and the value now is in access to large-scale renewable energy required to power the future of supercomputing. Whether that be Bitcoin mining, whether that be AI, two super trends that are front of mind right now, as well as whatever comes tomorrow. We have delivered on our strategy to bootstrap a large-scale and profitable business with Bitcoin mining, and are continuing to leverage that asset base into new, higher value and new, increasingly interesting use cases such as AI. Our team's depth of experience in energy infrastructure, data centers have allowed us to organically develop a leading data center platform from the ground up. And our ability to continue to find and incubate greenfield opportunities and then execute upon them is a very important differentiating factor and an enormous opportunity for us in this power-constrained and constantly evolving market. Finally, we've covered a lot over the past 20 minutes, so to try and tie it all together and highlight how Will and I are thinking about our strategic priorities. The market context, as we've covered, presents significant opportunities for IREN. The escalating demand for power and liquid cooled data center capacity, as along with the increasing institutional adoption of Bitcoin. If we start with our existing data centers in British Columbia, they continue to mine Bitcoin profitably and generate positive free cash flow. But how are we thinking strategically about British Columbia? Well, firstly, we continue to grow our AI cloud services business in a sensible way, currently operating side by side with Bitcoin mining. As many of you would have seen, in our Prince George data center, we have Bitcoin mining ASICs securing the Bitcoin network, operating right next to latest generation NVIDIA H100 and H200 GPUs, providing cloud services to AI clients. This is something that we will continue to explore, and it's been pleasing to see even an uptick in observed demand post DeepSeek. In addition to that, we're continuing to explore AI co-location opportunities at these sites. Again, that strategy of bootstrapping sites with Bitcoin mining, and then as higher and better value use cases come along, looking to insert them on our infrastructure base. At Childress, fair to say it's a very exciting data center campus today and a hive of activity. We're growing Bitcoin mining capacity to 52 exahash this year and continuing to generate, again, significant operating cash flows and profitability from these operations. However, we're also really excited about delivering Horizon 1, our 75 megawatt liquid cooled data center to be brought online this year. The way we think about Childress strategically is as follows. Firstly, once again, underwritten by Bitcoin mining, as was the plan 5 years ago, as is the plan going forward. Then utilise the site for higher value use cases as they emerge. We believe liquid cooling AI data centres is likely to be one of those and are accelerating our investment into this space. Importantly, from a strategic standpoint, we view Childress as a focus for multi-tenant co-location, preserving Sweetwater, which I'll come to in a second, for a potential single site deal and tenant. Sweetwater, the Sweetwater Data Centre Hub. So we have terminated the site sale process with Morgan Stanley. We're now working with a range of different advisors, brokers and partners on a broader range of opportunities, where almost all of those opportunities now involve us retaining long-term ownership of the site. Given the scale of the site and the market backdrop of hyperscalers chasing 1 gigawatt plus single site campuses, we are prioritising Sweetwater 1 as well as the emerging Sweetwater Data Centre Hub for a whole of site single tenant co-location opportunity. Sweetwater 2 and the potential creation of this 2 gigawatt data centre hub in West Texas only goes to further strengthen the strategic opportunity in this area. In the meantime, as we continue to explore those conversations, we will retain flexibility to once again bootstrap this site with Bitcoin mining, as we've done with the rest of our portfolio since day one. Belinda, over to you to cover the financials. Thank you.
Thank you, Dan. So good afternoon to those in Sydney. Sorry, actually it's morning here. So good morning to those in Sydney. It's actually a beautiful day, and good afternoon to those in North America. Thank you for joining us for our Q2 FY25 earnings update. As Dan earlier mentioned, this was a record result. We delivered Bitcoin mining revenue of 113.5 million and operating cash flows of 53.7 million. An overall net profit after tax of 18.9 million. Adjusted EBITDA for the quarter increased by 60 million to 62.6 million. With the average operating hash rate increasing from 12.2 exahash to 22.6 exahash, and we mined 1,347 Bitcoin at an average realized price of 84.3K. So I just noticed my camera may be out, so I'll try and adjust that if possible. Okay, I think that may be back on. Okay, net electricity costs remained relatively flat for the quarter at 28.9 million, with the increased megawatt usage at Childress offset by lower cost per megawatt due to the transition to a spot pricing strategy in August 2024. As such, the average net electricity cost per Bitcoin mined decreased from 35.4K versus 21.4K. Other costs of 25.1 million increased by 3.7 million, primarily due to additional purchase of renewable energy certificates at Childress for the increased megawatt usage, as well as construction insurance costs at this site. The cost base reflects a business today that is delivering significant growth and projecting continued expansion over the coming years. So moving on to cash flows. Closing cash at bank at 31st of December 2024 was 427.3 million, with receipts from Bitcoin mining activities of 113.6 million and AI cloud services of 3.5 million. Increase in electricity payments of negative 3.5 million, reflecting continued expansion at Childress, with commission capacity increasing from 200 megawatts to 350 megawatts during the quarter. Decrease in net cash used in investing activities of 217 mil due to a decrease of mining hardware, primarily due to significant milestones payments made in the previous quarter. There was an increase in net cash from financing activities of 372.3 million, with 311.7 million net proceeds from the convertible notes and 63.7 million increase in net ATM proceeds during the quarter. Since the balance date, a further 50.4 million of net ATM proceeds have been received, and the total current number of ordinary outstanding shares is approximately 219 million. So now moving on to the balance sheet. During the quarter, total assets increased by approximately 500 million to 1.9 billion as a 31 December 2024, providing a strong balance sheet to support our future growth opportunities. On 6th of December 2024, we issued a 440 million convertible note with an annual interest rate of 3.25%, which is due to mature on June 15, 2023, unless earlier purchase, redeemed, or converted. Concurrently to the convertible note, we entered into a cap call transactions of 44 million and a prepaid forward of 73.7 million. As IREN currently reports under International Financial Reporting Standards, the convertible note embedded derivatives and financial assets have been brought to account at their fair value at inception and revalued at the reporting date at fair value through profit and loss. As IREN transitions to US GAAP reporting from 1 July 2025, the accounting for the convertible notes will be reassessed, as well as the cap call transaction and prepaid forward, in line with the applicable US GAAP standards. Total equity increased to 1.3 billion, with the sale of 25.3 billion shares during the quarter ending December 31st, 2024. I think now we're turning over back to Lincoln for the start of Q&A.
And we'll go with our first question. Our first question comes from the line of Joseph Vafi from Canaccord. Your question, please.
Hey guys, good afternoon to us in the U.S. and good morning to you. Really great update, a lot of exciting things. Maybe we just start here on the update on Horizon 1. Sounds like a pretty exciting project, energizing or being ready later this year. I was wondering if you could kind of talk about CapEx and where that stands at Horizon 1 and, kind of what you've learned, especially with this rack density that you're building there. And then I'll have a quick follow-up.
Kent, would you like to take this one?
Yeah, happy to jump in there. So we had some guidance that Dan mentioned within the presentation itself around the CapEx levels that we're seeing. Importantly, on our side, we are able to utilize a lot of the existing data center architecture, which means that we believe we're able to deliver this liquid-cooled capacity at very effective cost per megawatt, but still with all of the key redundancy and other features that ultimate end users of that capacity would expect to see. We've also, it's worth noting, and we've discussed it in prior calls as well, already been ordering many of the long lead items associated with that build out as well. So as we do with all of our build out, whether it's on the Bitcoin mining side or on the AI data center side, making sure that we are well ahead of the curve in terms of ordering those long lead items.
Great. That's great color, and thanks for that update, Ken. Maybe we talk a little bit on Sweetwater. Clearly a very ambitious project with the update that we heard here about adding Sweetwater 2 to Sweetwater 1 and the fiber loop interconnect. And I know, Dan, you also mentioned that, the agreement you had with Morgan Stanley is now kind of moving to the next phase where you're in different kinds of discussions. 2 gigawatts, quite of a ambitious big data center, which would probably be used for AI. And I know you've had probably a lot of discussions with a lot of players in the space. At a high level, this would be like massive. And so just trying to get a feel for demand out there amongst hyperscalers or other players around 2 gigawatts, and what you're hearing at a high level. Thanks a lot.
Yeah, no, thanks, Joe. Look, we were called far less polite terms than ambitious 6 years ago when we first suggested that the future of data centers may not all be in metropolitan areas because maybe there wouldn't be enough power there. So I think you fast forward to today, suggesting that a 2 gigawatts data center hub may be viable in the context of the market backdrop, all the announcements being made, including people with objectives far greater than 2 gigawatts. I don't think it's ambitious. I think it's entirely realistic and reflective of where the market is today. We have been surprised coming into 2025, just over that kind of Christmas holiday period, just the step up in intensity in this sector. And I can't think of many, if any, hyperscalers that we're not talking to that aren't interested in 1 gigawatt plus campuses that can be delivered in the next few years. The market absolutely seems to be there. We're in a lot of active conversations. But again, I'm going to temper all of this because it's ones and zeros. You either do a deal or you don't. And we've got the ultimate backstop of building out bootstrapping with Bitcoin mining and preserving that single site opportunity where the value of having clusters all contained geographically on one campus seems to be quite powerful from these hyperscaler perspectives. So it's interesting. I wouldn't call it ambitious. I can call it entirely realistic. Yes, there's risk around Sweetwater 2 and getting the final signatures and executing that and turning it into a real project rather than hypothetical. But we're working hard on that. And I'm excited.
That's great. That's a great update. It's a great path forward. And thanks for the update.
Thank you. And our next question comes from the line of Greg Lewis from BTIG. Your question, please.
Yeah, hey, thank you, and good afternoon, or good morning, and thanks for taking my questions. I guess my first one, Daniel, was around, the update at Sweetwater with the incremental 600 megawatts. I guess a couple questions around that. And I guess the first one is, you're looking to potentially re-energize in 2000 or energize in 2028. When did we have to start getting in the queue to even be able to try to get on that track to 2020? Realizing we don't have the approvals yet and there's still work to do, but just kind of curious as you see that to even be able to kind of talk to the 600 megawatts, and then kind of has that changed? I.e., if we were to kind of get in the queue today, what would that look like?
1,000%. It's actually extraordinary how hard this is. To give you some context, we received a draft connection agreement for that site following completion of the studies in July last year. So where are we? February. How many months is that? Trying to get signatures on a document. It is so different to how it was 12, 18 months ago. I don't know how all these megawatts are going to be developed going forward. We've obviously got our multi-gigawatt development pipeline, including sites in Texas as well as globally and broader in North America. The congestion, the difficulty in actually getting these projects over the line and crossing that 0 and 1 barrier to having a project that you can actually build out on, it's actually extraordinary the way we're seeing it at the moment. So we'll continue to push. We almost didn't disclose Sweetwater 2 today, but we are getting close. We feel like we're getting close, and it is material to how we think about Sweetwater 1 in the context of the broader market dynamic we're seeing in West Texas. But absolutely, there's risk around any megawatts that aren't contracted, and we are living and breathing that every single day. I don't know, Kent, if you've got anything you'd like to add to that.
Yeah, the only other thing I would add, as Dan mentioned, the process has taken a long time for that project, and that was connection requests that we submitted over a year ago now. For projects that have been submitted in more recent months, we know that there has been a massive increase in the number of applications to utilities and to ERCOT, and those utilities and ERCOT haven't substantially expanded their teams and the number of people that are looking at those connection requests. So, anything that has been submitted in the very recent number of months is going to take incrementally longer than what we saw for that Sweetwater 2 site. So it is becoming increasingly difficult.
Okay, great. Thank you for that. And my other one was around, just kind of looking for color, and it's realize things are evolving on a daily basis. But, you mentioned that $6 to $7 million per megawatt. It's our understanding that a lot of the grid and the power equipment that's going to need to be sourced comes, maybe comes from Mexico or, definitely inside NAFTA. And so as we think about that $6 to $7 million in the event that there are tariffs, I don't know if you want to talk about maybe when we think about that $6 to $7 million, is there any way to kind of frame out how much of it's imported without getting into specific, price numbers, maybe how much of it's imported? And yeah, I guess that's kind of curious how that could be changing, at least this, in the, over the next few quarters.
Yeah, I'm happy to jump in there, Dan. So yeah, it is obviously a very dynamic environment at the moment, changing on an almost daily basis. And yes, it's something that we continue to monitor going forward. There is the potential for higher construction costs. We do have a very diversified supply base, so not everything today is coming in from the countries that have been announced as potential targets for increased tariffs. So we do feel like we're in a good position to handle it. And of course, anything that does get implemented is likely to hit all other providers as well. So I think it would be felt across the industry rather than something that is very specific to us. But yeah, we have been working on diversification of our supply base for a long time to make sure that we always have alternate providers in place. And while we didn't obviously envisage these specific tariffs and things like that, it was very much with multiple different scenarios in mind.
Okay, thank you very much for the time. Have a great day.
Thank you. And our next question comes from the line of Darren Aftahi from Roth. Your question, please.
Yeah, hey guys, thanks for taking my questions and nice job on the progress. Just two, if I may. I know in the past you guys have always talked about looking at ROIs from the lens of the cost to build an exahash with Bitcoin and kind of the ascribed value the market gives you. I'm just sort of curious what calculus you kind of went through with Horizon 1 in terms of kind of reducing the 5 exahash and deciding to build the 75 megawatt HPC endeavor. Was that more of just always planned and now you're kind of formally announcing it, or did something kind of change in what you're seeing?
Yeah, hi Darren. Appreciate all your support. Look, we deliberately didn't put numbers in the presentation because none of us know. This is unique. Like liquid-cooled data center capacity just doesn't really exist at scale, and there's no real market for it. What we do know and can see is traditional co-location rates and co-location rates for capacity that isn't necessarily liquid cooled for 75 megawatts. And I think when you run those numbers against a backdrop of capex of 6 to 7 million, the numbers potentially look quite compelling. But we're not here to estimate where we'll get to. We're in a series of very different customer conversations around utilizing that capacity. And I think the decision goes more broadly and it's more strategic. It's saying, like, if you step back, you've got Bitcoin, we know where that's at. It's a great business, but we are so uniquely positioned from a strategic perspective to capitalize on this AI thematic and build out something that is relatively unique this year. Obviously, if AI fizzles out and becomes nothing, then the facility, we might have to repurpose it for Bitcoin mining or another use case. But I think the conviction we're seeing in AI at a macro level and the lack of ability of the current market and I guess those micro data centers in metropolitan areas to service these types of capacities, it just seems a really obvious opportunity for us where I would expect we'll generate strong returns, not just from the 75 megawatts, but what it then unlocks strategically for our platform and how it helps us in the conversations that we're having around Sweetwater and the potential monetization pathway there. Because all of a sudden we've now got a liquid cooled AI data center design signed off by global engineering firms that we're building. It's real, it's happening. So I think the strategic value to the platform beyond the discrete economics from 75 megawatts of Horizon 1 is incredibly powerful.
And I think in addition to that, Darren, what we've really seen is the demand side of things crystallizing over recent times. Historically, obviously Blackwells were announced and everybody had an eye towards liquid cooled data centers. But what we're seeing now is demand from a number of different customer segments, and in particular, customers that have already placed orders. And so they absolutely need liquid cooled capacity in order to house those GPUs. And we're seeing, as I said, that range coming from a range of different customer types, whether it's large hyperscalers, the neo clouds, enterprise customers as well. And that for us has really helped crystallize our decision making that the time is right to make that investment in this capacity.
That's helpful. Just one more, if I may. I know you mentioned there's some risk to getting it across the goal line, but what's the strategic benefit of you guys announcing Sweetwater 2? Is this more customer focused or is there something else? If you mind indulging us, thanks.
Yeah, look, it is very close, but I also think it's material for our investors to be aware that this project exists because it provides context to our strategy with Sweetwater 1 and the single site opportunity that we're seeing. But B, it's material in the context of the broader market thematic and what's happening with this chase for multi-gigawatt data center campuses, particularly in West Texas, to build out these AI clusters. So yes, ordinarily we don't disclose development details because there is risk, but given it is late stage, given its materiality connected to the rest of our business, we thought it appropriate to bring investors into the fold and share a little bit more about this specific site.
Thanks, guys. Best of luck.
Thanks, Darren.
Thank you. And our next question comes from the line of Brett Knoblauch from Cantor Fitzgerald. Your question, please.
Hi, guys. Thanks for taking my question and congrats on the print. I guess, the whole sector kind of fell off following DeepSeek. I think in your prepared remarks, you talked about maybe interest or demand picking up post that. Does that factor into maybe why you guys are announcing Horizon 1 after maybe just only recently kind of upping your hash guidance from 52 to 57 by end of the year?
Yeah, I think as Dan mentioned earlier, that's right. And we've seen it both on the cloud and the co-location side. So it's not just one area that it's limited to. But yes, it absolutely does factor into the thinking. And as I mentioned, we have seen a large uptick in demand for liquid cooled capacity, and the timelines that people are wanting that demand on are something that we feel very well prepared to deliver upon, and that we have a competitive advantage in, because we don't think there are many others that are going to be able to deliver liquid cooled capacity on that same timeline. So particularly 2025, but even into the early parts of 2026, still seeing a shortage of supply going out that far.
Probably that's helpful. And then is one way of thinking of Horizon as it's almost like a model home, showcasing who would be the big tenants at Sweetwater, like what you can build and design, and kind of giving them confidence for doing that same exact thing but on a much larger scale.
Yeah, I think that's certainly part of the benefit of it. If you look at our executive management team and board, we've got a very long delivery of success, history of successful delivery of large infrastructure projects. So in the many billions of dollars. So we certainly have the expertise and capability internally. I think we've proven that out to a large extent with the build out of the Bitcoin mining side of the business. And as I've discussed in previous calls, the fact that we're building out 50 megawatts of data centers a month is, to many people that we talk to in the industry, a massive surprise. But we've been doing that for many months now, and continue to deliver at that clip. Albeit acknowledging that is a different type of infrastructure to liquid cooled. So I think the fact that we're able to build out Horizon 1 at the Childress site is just a further demonstration of our internal capabilities. So yeah, I think it absolutely assists with all of those conversations. And many of those are, as Dan alluded to earlier, sort of taking more of the path of us having an ongoing ownership interest in the infrastructure itself. And so, further demonstration of our capabilities is certainly useful.
Perfect. Really appreciate it, guys. Congrats.
Thank you. And our next question comes from the line of Stephen Galgoa from Jones Trading. Your question, please.
Hi, Dan, Belinda, Kent. My question relates to investor concerns around potential HPC monetization of Sweetwater 1. I think there are two, large ones. One, the site's suitability for inference compute, and two, single tenants like hyperscalers' willingness to do a deal with a Bitcoin miner, given sort of this perception that there's more balance sheet risk. Could you address sort of the validity of these concerns in your view, and has your desire to retain ownership of the land potentially adversely impacted conversations with hyperscalers for a deal at the site? Thank you.
Hi, Stephen. Good to see you. Frankly, I think the world's moved past both of those two issues, and I'm surprised that we're still talking about it. The suitability of West Texas for AI training and inference. Yep, I get it. People asked questions 6-12 months ago, and we continued to put forward the fundamentals and actually break down the narrative that was being promoted. But I think we fast forward to today, and you're seeing the announcements in the market, the intentions of all these trillion-dollar companies and people spending hundreds of billions of dollars. The question as to whether you can run inference for AI out of West Texas, I don't think it's really worth addressing, to be frank. The question around whether people will engage a Bitcoin miner to build out AI data center capacity. Again, I feel like we're going over old ground. Let's go back 5 years ago. We're not a Bitcoin mining company. We've never done CCAN shipping containers, stitching together projects in the middle of the desert to mine Bitcoin and not think about what's tomorrow. Our data centers have been purpose-built since day one for multi-tenancy, different applications. Like we are operating, again, like I feel like a broken record. We've been operating for 12 months now, NVIDIA GPUs right next to Bitcoin miners in the same data centers we have ever built and owned at all of our facilities. So honestly, I don't hear these investor concerns. I feel like we've addressed them pretty comprehensively, and we'll just focus on the next steps, which is monetizing the portfolio.
All right, thanks, Dan.
Thank you. And our next question comes from the line of Joe Flynn from Compass Point Research. Your question, please.
Hi, guys. Thanks for the question. I guess, since the last business update 3 weeks ago, what would you say is the biggest factor that led to the decision to build out the remaining capacity at Childress for AI HPC? And would you characterize that more as a spec build, or do you have any maybe soft commitments or interest to ultimately sign that capacity to customers?
Yeah. Kip, would you like to talk to this one?
Yeah, sure. So, touched on earlier, we're seeing this, dynamic where the demand side is really starting to coalesce in terms of the requirement for liquid-cooled data centers. So, that is a part of it. As Dan mentioned earlier as well, the return side of it, looks very attractive given where we're able to deliver that capacity in terms of a CapEx basis. In terms of the conversations that we're having, we are having multiple conversations around their capacity. I think a lot of what you see with these customer conversations is there are people talking about liquid cooled capacity and having the ability to deliver it, but they don't have long lead items on order. They're not advanced with their designs. They haven't started making any plans for construction. And so we think by actually catalyzing, the construction and announcing this to the market and demonstrating the tangible path towards delivering this capacity, that will help with a lot of the customer conversations that we're having. So, it's certainly not just an on-spec build, but, again, we don't want to get people overexcited that there's a customer contract, about to land a week or two away. But there are, a lot of good conversations that we're having and seeing interest from a lot of different customer segments for this type of capacity.
Does that answer your question?
Yeah, sorry. And on the financing component, you're originally we're going to use the ATM to build out the remaining capacity at Childress. Do you think there's opportunities to debt finance this at the project level? And yeah, thanks.
Yeah, so at a more general level, as Dan mentioned earlier, we are looking to multiple different sources of financing. We do have the ATM in place. There are other avenues available to us at a corporate level that we continue to explore. We are very conscious of making sure that we are having the right mix of debt and equity at a corporate level overall. But one of the things we do like about the potential co-location side of the business is the ability to project finance it and attract different forms of financing. So once you catalyze a customer contract, they generally take the nature of 5, 10, 15 year, so very long-term contracts that lend themselves very well to project debt financing. So that absolutely is a possibility going forward in terms of the way that we finance this sort of build out.
Sorry, and one more. What would you guys estimate the remaining CapEx, to complete the 1.4 gigawatt substation by April? And ultimately, and I guess longer term, I mean, in regards to your conversations, like, are you considering maybe like, partnering with a, financing provider or, doing a JV or anything like that? Thanks.
Yeah, in terms of the specific CapEx for the substation, we haven't disclosed, but substations are generally in the tens of millions. So well and truly covered by existing sources of capital, operating cash flow, as we've discussed. In terms of financing partners, look, ultimately, these deals come down to the customer side, the revenue line. Get that, the financing will fall into place. Will and I are pretty skeptical of JVs and partnerships, etc., because my view, and it's been a long-term held view across a variety of businesses, is that all you're doing is kicking the can on difficult decisions. Because a JV, partnership, a co-owned vehicle, all you're doing is saying, we don't know how to make decisions today, so therefore we're going to have a governance arrangement to make those decisions down the track. And as you'd see throughout our business history, it's all about controlling our own destiny and being able to move quickly and nimbly to take advantage of the opportunity. So do we ever bring in an equity investor into a project company? Oh, never say never, but our bias is always going to be to control the financing structures and governance of the underlying projects.
Thank you. This does conclude the question and answer session of today's program. I'd like to hand the program back to Dan Roberts, CEO, for any further remarks.
Thank you. Maybe just to spend 2 minutes addressing a couple of questions on Twitter or now X, as we've got a bit of a community there that I'd like to give a shout out to, and the level of analysis there is pretty healthy. So just to run through a couple of their questions. Agrippa Investments, could you provide more detail on the financing strategy for Horizon 1, ATM versus debt? As Kent mentioned, the financing strategy is flexible. The $1 billion ATM obviously underwrites certainty in our ability to deliver these, but the opportunity to layer in debt and project finance into AI data centers against customer contracts is real. Equally, we continue to look at the convertible note market. We continue to look at other forms of capital. So the expectation should absolutely not be that ATM is the sole source and our focus of financing going forward, but it does provide something that we can count on to underwrite these growth ambitions. Could you please clarify the unrealized gain loss on financial instrument in the P&L, the $12.9 million? That's just change in fair value of the convertible notes. A couple more. Why not HODL some of the mined Bitcoin from HODL 15 Capital? We've outlined this before. We don't believe in diluting shareholders to put Bitcoin on our balance sheet. You guys can buy it yourselves. Will we convert to a REIT as suggested by Wolf and someone else? Not at this stage. We see value creation more in the data center development and operations rather than being a landlord. How long is the sale process from start to onboarding a client into a data center? It's a bit, how long is a piece of string? Sorry, James. It depends on the client and the situation. Why did Morgan Stanley step out of the sale process? They didn't step out. They were terminated. We believe our opportunity is best served by dealing elsewhere. What's the best place to get food near Childress? The Plaza has fantastic Mexican. So anyway, let's wrap that up. Thanks for all the support on Twitter. To wrap up our Q2 2025 earnings call, thank you for listening in. We're really excited. The 3 key initiatives. 1, continuing to expand our Bitcoin mining, which we're seeing flow through to robust earnings and operating cash flow. 2, the development of our Sweetwater data center project, and hopefully we projects in forming a potential 2 gigawatt data center hub in West Texas. The opportunity to pursue a single site tenant for that facility, but ultimately underwrite through Bitcoin mining in the meantime. And then finally, our expansion into liquid cooled AI data center capacity with the announcement of Horizon 1, which we're really excited to deliver on this year. So thank you everyone for dialing in. Have a good evening.
Thank you, ladies and gentlemen, for your participation in today's conference.
What's up, Colin? Oh, you are muted. Let's get you
About
going.
whether or not hyperscalers want to partner with Bitcoin miners.
That was a interesting conversation. A little combative there at the end, certainly. So let's go through some of the top thoughts. You have been covering them for people who are paying attention.
Hey, Will, there's a little bit of echo on your side.
Okay, let me figure that out. You go ahead.
Okay. Yeah, so just a few kind of high-level things. I want to go over some of the metrics from their earnings report. It's frustrating with IREN because, like I said at the beginning of the call, they do Australian fiscal year. So we're actually looking at their Q4. They call it their Q2 of 2025. You kind of have to jump through some hoops when you go through their financials, but here are just some of the metrics. I'm going to rifle through them, and then we'll kind of break some of them out and expand on them. So operating hash rate at the end of 2024, 31 exahashes, operating megawatts, 510, total Bitcoin production, 1,347 Bitcoin. Q4 2024 revenue came in at 119.58 million. For the Bitcoin mining segment specifically, that was 113.48 million. HPC earned 2.66 million, and other revenue came in at 3.44 million. Now, their adjusted EBITDA for the quarter was 62.6 million, which, all in all, pretty good. A little bit higher than we might want it, especially when you look at someone else like CleanSpark, who had 162.3 million in revenue for their Q4, and I believe their EBITDA came in at about 55 or so. So actually, when you really think about it, IREN's EBITDA coming in actually pretty strong there. But that's excluding, obviously that's before certain line items would be removed. That's not including this 12.9 million in a derivative asset from their convert that they booked as revenue, even though it was an unrealized gain. The earnings per share. We have just got a call.
Got a call in from Matt.
A call in from Matt for earnings per share. I believe it was 9 cents, but let me just double check. That's off the top of my head. I need to break it out here. Yeah, the basic earnings per share are 9 cents for the 3 months ended December 31st, 2024. So I have nothing to compare that to. We didn't have that for CleanSpark. I'm kind of with Penny. I think looking at EBITDA is kind of a good metrics for just how successful some of these miners have been at managing their costs against their revenues. A few other things here. The all-in hash cost for IREN was $24.55 per petahash per day. That's according to Penny. This includes operating costs, both direct and indirect, and SG&A. This shouldn't be surprising because their fleet is 15 joule per terahash now after they completely refreshed it with S21 series units. And they have probably, I think we can almost safely say that's the lowest hash cost in the game. There might be a few other miners that challenge it over the coming weeks when we get their Q4 and full year earnings in. But $24.55 per petahash per day as an all-in hash cost is really insanely low. Gives them a lot of breathing room over the coming year. I believe hash price is about $58 per petahash per day. So, if we go back down to like the 30s and 40s, like we saw last year after the halving, IREN's going to have a lot of breathing room. But obviously, that comes at a huge cost. I don't have their full year 2024 PP&E. That's property, plant, and equipment. But if we just look at the second half of 2024 for these 2 quarters that they have on their income statement, or their SEC filings, I should say, their total spending on PP&E for the second half of 2024 is $575.75 million. This is a huge sticker price. And that's going to be relevant because one of the things that Dan talked about that will box here in a minute, was they are really going hard on the Sweetwater site. That, as far as I could understand from the call, they actually don't have the PPA locked in for it, but they are trying to build out a multi-gigawatt data center specifically for AI and HPC. And also they say it can be flexible for Bitcoin mining if it needs to be. A few more things from the quarter. They financed they netted $311 million from their convert that they issued in Q4. That bumped their short-term debt up to 319. I'm not sure why that's listed as a short-term debt item, considering the convert has a maturity of 2030. I guess that's because you can call your convert if you're the note holder at any point. I assume that's why. I could be wrong, though. If there are any accountants in the audience who want to correct me, please feel free to do so. They also drew 147.71 million from an ATM over the quarter. Now, the biggest thing over the next year, I think, with regards to all this expansion that IREN wants to do, this is one of the things I wanted to talk about, is they have $1 billion ATM that they just opened in January. And that is going to probably be the primary fundraising vehicle for all of their expansion plans. The team was kind of cagey and elusive on what financing would look like. They got asked multiple questions about what the financing would be for their expansion plans. And they said probably some of the ATM, but as Dan said, if deal flow comes in, then the financing will follow it, which I thought was kind of interesting, basically saying we might be able to do some more traditional debt financing if we start getting some deals for these AI and HPC data centers.
Really quick to jump in there. So we have the post market on TradingView, and they're up 1% in post market. They closed the day up almost 5% on the day, and they just generally they're in a nice uptrend here. As I'm kind of backing out the image. So there is that part of it. In terms of like the ATM, it's a very large component versus what we saw with CleanSpark the other day, where CleanSpark has committed to not using the ATM going forward. I mean, who knows when they tap it again, but they have not used it, and they have the 50 exahash provided for by the convertible note. Any thoughts on the ATM? And then also on the debt market, that seems kind of interesting because we don't see a lot of these build outs with debt. I mean, the Stargate project doesn't seem to be debt based. We
don't actually know that though, right?
True. We do know how a lot of the Lancium build outs and the Crusoe build outs have been done historically, though, and those have been through equity.
I think that's the big difference here, though, right? Is Bitcoin miners typically lean on equity because no bank is willing to front them the capital.
Yeah.
Whereas one of the things that I talked with Sam Tabor on the Bitcoin Stock Show this week was he said that one of the things about pivoting towards an AI HPC business line like with White Fiber is it potentially opens the door for more traditional financing. And so, like, for instance, for the Stargate thing, I wonder, could an Oracle or an OpenAI actually tap debt markets, right? And then they could pass on that money in some sort of agreement with Lancium and Crusoe. I don't know the answer to that, but I do think that part of the AI and HPC play that some of these miners are hoping is that they'll be able to access capital that they otherwise would have been barred from. And I honestly think that that's going to have to happen for some of these build outs to materialize. I mean, the Sweetwater one that they talked about in this call, I have the press release here, make sure I don't put my foot in my mouth. I believe they're targeting, what is it, like 2.4 gigawatts. They're doing a 600 megawatt site expected to create 2 gigawatt Sweetwater data center hub. They want to fill this site. They have a 1.4 gigawatt expansion that they are trying to energize in April 2026, and another 600 megawatts in 2028. They want to fill this site with a single tenant. And so, like, if they had ever ended up finding themselves in a situation like Lancium and Crusoe with the Stargate deal, they might be able to entice financiers who otherwise wouldn't touch them because they're a Bitcoin mining business. So all that to say, I think one of the big takeaways for me for this call was the fact that, like, they're really leaning into the AI and HPC narrative, even though they have really strong Bitcoin mining fundamentals. Like they have the most efficient fleet in the business, right?
Yeah, one other thing I wanted to bring up was the fact that they've kind of hard pivoted to the liquid cooling, which maybe there's probably a bunch of good reasons for it, but it's just kind of funny from a narrative perspective. Like IREN historically has been all about air cooling, to the tune of them even saying that you should run air cooling for a lot of the AI HPC models that they're going to put in there. And a lot of people were scratching their heads on like how that was happening. But within this presentation, we saw that they're going to be doing, I think it was direct liquid cooling.
Yeah, direct chip cooling, which makes sense for their AI and HPC thing. I also thought that was funny with Dan. He said that that's like, and he kind of intimated that, or outright said that was kind of a new development. And as far as I could tell, that's considered best practice by a lot of major data center operators.
So
right?
like riffing on that a little bit, because we had a tweet from Asher Ganut with Hut 8 2 days ago showing the new sort of assembly chassis for their direct cooling design with Bitmain, which we've done some mining podcasts with that team about their model. It's like the UE20 S21 AG or something like that.
S21 U3 EXPH.
You know your stuff. So that model basically is like these blade ASICs. You kind of have like a server rack model, kind of put them in there. And then they have the direct cooling to the chip. It allows you to put way more voltage or whatever into the machine, way more electricity, just dumping it in there, and then get way more hash rate out of it. And this is obviously pretty typical in the GPU landscape. The one thing that Asher continued to bring up in this conversation is the fact that it's actually more robust and more powerful, and you can put more energy into these server racks than you can the NVIDIA Blackwell models with the GPU. So there's that, and I wonder if there's any sort of like thinking on the IREN team's thoughts about like how to do this. Like, are they designing their own stuff, or are they just using what's for market?
Good question.
Yeah, I don't know.
I think
Just kind
too,
of an open thought.
the other big thing for their AI and HPC business line that I thought was interesting is like, to date, IREN has basically just purchased NVIDIA GPUs and deployed them.
Yeah.
I've never been totally sure. Like, I think they're at their own sites, but that's hard for me to believe to a certain extent, because it seems like it'd be easier to just co-locate those to an actual tier 3 data center. But the Sweetwater deal seems to be, or the promise of the Sweetwater facility seems to be pivoting away from that towards a more pure infrastructure play, like we've seen from other miners like Core Scientific, right? Or the Lancium and Caruso deal, where they basically say, we have expertise to access the power and get the land and build out the facility, but we're not going to manage all of the other aspects of the business, like procuring machines or running them or doing the business development for that. I wonder if there's some signal there, right? Because I think that we've seen Hive and IREN try to do the former strategy of purchase GPUs and then build out HPC and AI lines that way. I think maybe that was just a quick way for them to dabble into this industry and maybe get a little bump on their stock as a result to cash in on some of the hype. But I think longer term, that's not going to be where the big money is for this. I mean, we've seen Riot recently pause Corsicana, the 600 megawatt phase 2 for that, to evaluate it for HPC and AI. So yeah, AI and HPC kind of dominated this earnings call for me. It was lurking in the background. I also talked about how they wanted to do 75 megawatts at Childress for AI and HPC, but then hedging it and saying, if we don't get that, we can just use it for Bitcoin mining. So one last thing I want to address, some of Matt C's comments about CleanSpark. He said CleanSpark earnings per share were 83 cents per share. That's before you account out fair value change in Bitcoin. So IREN doesn't hold any Bitcoin. CleanSpark holds a lot of Bitcoin. And there was actually a change to the accounting standards where now Bitcoin miners can adjust their cash flows according to Bitcoin appreciation or depreciation over a quarter. So I think I'm kind of in line with some other analysts like Penny here. I mean, that's good on paper, but that's actually unrealized gains or losses accordingly. And if that's not booked revenue, then I don't know if it's the best way to evaluate a Bitcoin miner's earnings for a quarter. So if you actually netted that out, I'm sure that those earnings per share, I don't know what the adjustment would be, but those earnings per shares would be lower for CleanSpark. It still might be better than IREN though. I just haven't run the numbers yet and I don't have them in front of me.
Cool. Let's pivot for a second and talk about our news story and then wrap up. So if you're with us, we broke some news earlier today regarding the CBP, the U.S. Customs Border Patrol, is working, I think, at the behest of the FCC. It seems to be at the behest of the FCC, but of course, all these things are hard to understand. And they're seizing, stopping, and detaining certain ASICs at the border. We talked to multiple major brokers in the Bitcoin mining industry. We also talked to some publicly listed companies that are affected by this. Of course, for this sort of thing, we're not going to disclose our sources because that could have very negative impacts on their businesses. But we always work with at least 2 to 3 reputable sources to put something like this out. We first broke this story back in September, and at that time it was just detentions across a bunch of brokers. It was probably related just to Bitmain and only certain Bitmain units that had AI chips in those Bitmain units related to a company that the U.S. Commerce Department would later put on a blacklist. Forward 5 months to today, and we had our phone ringing off this morning talking about seizures by the CBP of brokers' Bitcoin mining equipment, saying that it broke FCC regulations. This is a widespread seizure, and it's honestly could be a turning point in the Bitcoin mining industry if it does escalate even more. As of now, that's all the information we have. This could turn out to be nothing in 4 to 6 weeks, and maybe we just need to get more information, or maybe like the regulators are kind of like finishing up some stuff from the last administration. It's hard to know at this point. Colin, I want to throw it over to you, and I'll pull up the story on the screen.
Yeah, I mean, I'm just surprised that this is still going on and escalated. I'm not, I guess, not that surprised, but you said maybe it'll wrap up in a couple of weeks. I don't think it will, just because some of the miners that we talked to for the story last November about the original holds of this hardware at US ports are still having the same problems. Their equipment is still being held and it hasn't been released. The few things to highlight, just to kind of expand on what you said on this, the thing that's amazing about this escalation is not only has the Custom and Border Protection Agency seized Bitmain units for the first time since the scrutiny began, they've also started holding Canaan and MicroBT ASICs as well. So like their scope is broadening. During the initial action, they kind of contained it to a couple of ports. San Francisco and Detroit were the ones we heard about. Now we're hearing about ports of entry all across the U.S. in numerous cities seizing and or holding ASICs accordingly. So it's interesting. It's also very timely in the sense of we're 3 weeks into Trump's second term, and this is bad for Bitcoin mining, and Trump was supposed to be good for Bitcoin. I think it's a good reminder that obviously just because a president is in office doesn't mean things change immediately on a dime. Also doesn't mean that that president is aware of everything that's going on at once, but it is interesting and disappointing to see that this is still going on. Big questions for me are, why is this happening to specific companies? What is going on with the targeting of every single ASIC manufacturer at this point? And is there something deeper here about maybe some boxes weren't checked or some rules weren't followed? I find that hard to believe because the companies we talk to are some of the most buttoned up in the industry. But you do have to wonder what's going on here, because it's very curious that this is extending to Canaan and MicroBT units at this point. Because for the Bitmain ones originally, the T21 units that were being held, some of them might have had a chip from Softgo in them. Softgo is now a blacklisted company. It's on a trade restricted list from the Department of Commerce. So it's kind of understandable why they might hold those. Makes no sense why they'd be doing it for the others.
Yeah, I just threw up on the screen the report from September, we first put this out, and this was in relation to the detention of units at that time. And some of these people were able to get their units out. One of the main sources for the story actually has had those units stuck for about 6 months now. They've been facing fines, even though they're not able to pull those units. And they've had almost zero communication back. So they're actually escalating it and working with a US congressperson to kind of move forward. So what does this mean for the Bitcoin ASIC market? Of course, the big conversation we have on the mining pod is the arrival of a lot of these US based manufacturers like IREN. I see someone talking about that in the chat. There's also Blocks, Proto Miner, which we did some exclusives with them in December. Go check out those podcasts. And then the big giant in the room, I think, is BitDeer. Their Seal Miner units, which are supposed to come out this year. What will it mean for them? I think like this is probably a net benefit, but you also don't know if they acquire parts from overseas. That's something to keep in mind. For Canaan, MicroBT, Bitmain, this is significant in the sense that you're going to be perhaps losing part of your market share. Luckily, they have all been diversifying. Canaan's really been focusing on, excuse me, Canaan's really been focused on growing its self hash rate. So it's been kind of boosting that quite a bit. And then Bitmain obviously has this very large funnel into other parts of the world. Africa has been growing for them. Ethiopia, they have 600 megawatts there. Not Bitmain specifically, but just in general, that country is 600 megawatts of Bitcoin mining. And then Russia, of course. So I am unsure what the effects will be as of now. Ideally, it's not something drastic because there is a lot of future orders out for these Bitcoin miners, and it could be very, very bad if all of a sudden these future order payments were made and then these large Bitcoin miners have to figure out what to do. For these other guys, I think it's probably a good moment for them. Even still, however, on the silicon front, the Arizona TSMC facility is still not fully set up. There's not all like the wafer sizes that people want for them. And so a lot of these manufacturers are still getting their stuff from overseas and not from the US specifically. So this does tie into that whole geopolitical question about like, what is Trump going to do with TSMC? Is he going to force them to kiss the ring? And the last thing I'll throw at you is, what does this mean for Intel? Intel, which was the chip dominant manufacturer for so long, kind of fell apart. They're going to toss their CEO out and probably reboot in some sort of way. They're probably too big to fail. And I think that they're going to be a breadwinner if something does happen here in the future. So keep an eye on Intel. That's all I really got. Colin, any thoughts before we
keep an eye on ASIC miner premiums in the US versus Asia? They've been going up over the last few months. They'll probably continue to go up. If you have hardware in the US, people will almost certainly pay a premium for it because all of the shipments coming in from Asia are hitting roadblocks.
As you can see, Colin and I both have colds, but we spent all day tracking down this information for you guys. So if you do enjoy it, give us a subscribe on our newsletter. I'm going to drop the link into the chat here. We put out 4 different newsletters per week on the Bitcoin mining industry, and Colin writes a weekly piece on the Bitcoin mining landscape on Wednesdays. I like to think it's the best piece in Bitcoin mining every week. So go check that out. Colin, thanks for jumping on the horn with us. If you enjoyed this, give us a like, subscribe on YouTube. The feed will just be available on YouTube and then Twitter as well. Colin, check you later.
Take it easy. Have a good week, y'all.